Peter Elides with you. This is going to be a special update. We've already done a weekend update for our regular subscribers, and by the way, for those of you who are regular subscribers out there, the last update, the weekend update, got flipped around in the list of updates. So when you go to the update, you'll see the March 25th one first, and then the one that we did for the 26th, which is for this past Friday, will be in second place. So just to straighten that out. And this one will now move to the top because this is a special update. And we're going to actually show this update to both our regular subscribers, our paying subscribers, and to YouTube subscribers too, because this could be a very special update. Let me show you what's going on. First of all, this is the Dow Composite Average, and on Friday, it came into a projection window. These are closing price projections. Now, let's show you the shorter one so you can see. We'll start from the very shortest offset, 1.75 to 2. Okay, as you can see, we reached up to that and surpassed it. So we look at the next longer offset. That's 3.5 to 4. On the 3.5 to 4, we reached up to that and surpassed it. Then we go to the next longer offset, 7 to 8, which is a nominal 20-day projection, closing basis, and bingo. Look at that, right inside the projection window. Now, to be clear, the Dow Jones Industrial Average and the S&P have slightly higher projections. Let's take a look. Here we go on the Dow. So the Dow has projections up to 33,231 and 33,528. So if those work out, then what I'm showing you today is a little bit premature and not going to work out. But I wanted to make sure that we put ourselves in a position where on a technical basis I would let you know where we stand. So these are the projections. There are higher ones outstanding for the Dow Jones Industrial Average, but for the Dow Composite, which is all three averages together, upside projections have been met. I think that might turn out to be relatively important for the short term. Here's what I wanted to show you, though. Here is the purpose of the update. Watch this. Dow Jones Industrial Average. Here's the Friday close. 33,072.88. Here's the prior all-time high close. 33,015.37. So on March 17th, 33,015.37. On Friday, 33,072.88, a new all-time high. Let's look at the S&P. Here's the Friday close on the S&P. This one's a little closer. Take a look at it. 39.74.54. Prior all-time high, 39.74.12. So both the Dow and the S&P went to new all-time high closes. Let's take a look at the AD line. Here we go. Look at this. Here's where it closed on Friday, and this is where it closed on March 15th. What does that mean? It means for the first time in a really long time, we have divergences with the indexes and the AD line. They're not dramatic. They're not long-term. Probably some people will argue, well, that's not the kind of divergence we're talking about at important tops. We need a bigger divergence than that, or a divergence over a long period of time. I don't know about that. What I do know is that on Friday, with the indexes, the S&P and the Dow closing at new all-time highs, the daily AD line of the New York Stock Exchange did not confirm for the first time in a very long time. And when that happens, watch out. Remember, we have hit some really long-term projections. There are some on the dailies that we have not hit that remain outstanding to the upside, but their weekly equivalents have been hit. So we have been saying now for a few weeks, we are in danger territory. And I had to do this update because for the first time in a long, long time, we have a divergence between the popular averages, especially the Dow and the S&P and the daily AD line. One more thing. I'm not going to show it to you here because I was in the hospital so long I haven't kept up with my technical readings, but I noticed from Tom McClellan's website that the McClellan oscillator on Friday closed right around the zero level. I can't tell you how many times in history that with the indexes or the averages going to new highs, whether they be 52-week highs or all-time highs, and the McClellan oscillator just at the zero level, that the market has had some kind of topping action. So there was an urgency to this update. I wanted to let you know that not only do we have a divergence with the AD line and the popular average is going to new all-time highs, but we also have the Dow Composite Average meeting a short-term projection. There are higher ones on the Dow and the S&P, but maybe the composite this time is the more important one. So that's where we'll leave you. As we're putting this update on right now, it's around 5:19 p.m. Pacific time. You can see the futures are down. S&P futures down 1750. The NQs are down 60 points. The Russell down 17 points. So there's some follow through, or I should say, there's some turnaround to the downside, and this is potentially an exciting juncture because of this divergence. Okay, we wanted to make sure to get that online for both our paying subscribers and for the YouTube subscribers. So this is something to be watching very closely over the next few days. Thanks for watching. We'll keep you updated, our regular subscribers. For those of you that are YouTube subscribers, you can get updates like this virtually every single market day. Simply go to our website, stockmarketcycles.com, and become subscribers to our video updates. Thanks for watching. We'll talk to you soon.